In this video, we'll discuss what factors can affect your credit score when you pay off a mortgage. In some cases, it doesn't affect it at all. I'll run through the areas that could be affected, and I'll also, if you stick around for the end of the video, I'll run through my credit scores from all three agencies and what the change in the scores were when I finally did pay off my house. Does paying off your house lower your credit score? A couple of times over the last few years, I have had an 850 credit score, and Dave Ramsey would have said that it probably cost me $100,000 in interest to get that score. After 13, I don't remember, it was 13 or 14 years, I did pay off my house, and it took about 3 months or so for it to hit my credit score. It did lower it, and I'll go through my credit scores at the end of the video. There are 5 things that affect your credit score. Your payment history, which is 35%, that's the biggest one. Your credit utilization, how much of your credit you're using at any given time, is 30%. The length of your credit, how old your oldest accounts are. The length of your credit history, which is 15%, is based on an average that's taken from all the different forms of credit that you have. When you open up new accounts, it reduces the length of time that your average credit has been in effect. Moving on down the list is your credit mix, that's 10%. This is different types of credit. For example, a home loan and a car loan, those are installment type credits, whereas credit cards are revolving credit, as is a HELOC, home equity line of credit. So you want to have a mix of these different ones to have the full 10%. The final thing that contributes to your credit score is if you've applied for new lines of credit. Each time you apply for a new line of credit, it's called a hard hit, and you don't want to have more than 1 or 2. They go back 1 year. When you close out a mortgage, the 2 things that are affected the most are length of credit history, because mortgages tend to be longer credit lines. And the other is credit mix, because for some people, if you don't have a car loan, you don't have installment loans, the only thing that remains would be your revolving credit.
Let's start with the credit mix. In this first case, if you have 2 car loans, a primary home mortgage, a vacation home mortgage, and 2 credit cards, you have a mix of both installment type loans and you have more than 1 revolving credit. If you were to pay off your primary home mortgage, you're still in possession of 2 car loans and a vacation home mortgage. There's still a mix of credit, so paying off your primary home mortgage would have no significant impact on your credit score. In credit mix case 2, you have the primary home mortgage, that's an installment. There are no car loans this time or a second home. A home equity line of credit, or HELOC, is a type of loan that is similar to the revolving credit on a credit card in that it's always available to you. It's sort of like having a credit card that is backed up with the equity in your house. In this case, if you were to pay off the mortgage, you would only have revolving type credit, and you would have done away with the installment type, so your credit mix would be impacted, and that 10% could lower your score. As far as your credit history is concerned, the way that it's calculated is they look at the age of the newest account, the age of the oldest account, and the average age of all of the accounts. Since this is the case, closing old accounts or opening new accounts will both have an impact on the average length of time that your credit history is in effect.
At the point when I paid my house off, my credit score was typically hovering around the 845 range. The new scores as they came out were 830, 827, and 817. So it was a significant impact, but one of the things that you should know about my case was I have 0 debt in any other area other than a credit card, and the credit card balances are cleared at the end of every month. I don't have car loans, I don't carry a credit card balance, I don't have a HELOC or student loans, I have no debt of any kind. You can see for me it was a very significant drop.